Ladies and gentlemen, welcome to the Amazon earnings call breakdown. Not only are we going to be talking about Amazon stock, but we are going to be talking about Amazon, Apple, Coinbase. We have, what are the other names? What was I? Already lost my train of thought. We just went live a couple seconds ago. But mainly, we're going to be listening to Amazon's earnings call. We're not going to be listening to Coinbase's. However, we are going to be following in on their numbers over the next, 15, 20 or so minutes. Cloudflare, that was another one. Strategy, Reddit, Roku. There's going to be a lot of fun names today. Over under on being late. I'm here, baby. Can't even believe this. Let's go, ladies and gentlemen. Welcome, welcome, welcome. Raise a hands who has Coinbase stock, or sorry, Amazon stock. Coinbase is another one I'm super excited about. Not really for their numbers. I mean, we really saw from what Robinhood's has put up and just the overall amount of volume that we've seen in crypto markets during Q2. Q3 is a different story. It's actually starting to reaccelerate. So if there is some commentary about sales and marketing spend, like they like to do operating expenses as their guidance, similar to Robinhood, these types of things could definitely push the markets higher. Commentary about stable coins, these sort of things would get me very jazzed up. So I am going to read through Coinbase's call 100% after this. It's just a matter of when exactly. By the way, guys, I heard of a tool that I have that's going to get upgraded that supposedly will end up giving us immediate access to all of earnings data the second it drops at a speed that is equivalent to Bloomberg's terminal. Okay. I don't have access to it just yet, but we will be getting that probably within the next week or so, which is a little unfortunate because obviously we've gone through, some of the earnings so far, but I cannot wait to try this out. And hopefully we get it a little bit during this earnings season and show off some of the strengths that maybe we'll get the full earnings report, AI summaries, everything before anyone else has the numbers. So that'll be very exciting. Amazon could save the day for us. So very true. Let's go take a look at the markets. Currently, although during the end of the day, it's seen. Why is this all jaded like this? There we go. Amazon up 2%. SoFi is up 3%, but falling into the close here. Figma up 262% to 120. Oh my gosh, if anyone got any shares of that, that is just incredible. From what I heard, most people only got one share through the likes of SoFi or even Robinhood, just because it was that oversubscribed. Now over 120, 121. Looks like a bunch of people are rotating out of every stock to go buy some Figma shares. Amit got one share? Yeah, I heard a bunch of people got one share. So, yeah, I'll have it for new Shift 4. I'll have it for Nubank. Or sorry, not Nubank. NVIDIA as well. Like the later earnings calls, I definitely will have it. But yeah. What is Figma? They're like a design app similar to Adobe, but mainly for actual user experience, user interface, these sort of things for websites, for applications, stuff like this. So I'm not a user, but obviously we have heard of Figma. I mean, they're so close and so competitive with one another that Adobe tried to purchase Figma a few years ago for $20 billion, and European markets or the European regulators ended up turning it down. Okay, that's the only reason why they didn't end up doing it. Now, as the market has skyrocketed, they're worth $60 billion, which is what they might end up closing out at. What's so interesting is the Figma CEO has these insane compensation packages similar to what Elon Musk had in, throughout like 2018, 2019, 2020, where as the stock rises, he has these multipliers. Like he only makes money if the stock is actually doing well. So his actions are well aligned with shareholder, benefits. But that was supposed to happen over like a 10-year period to get the stock above 100, and I think the range was like $100 to $135 per share, something like that. And we're already seeing it on day one of going public. Like, just insane. So that's absolutely incredible. Let's make sure I have Amazon's numbers ready to go, Apple's numbers ready to go, and we will get started when the bell rings its close in here in 10 minutes. Holy, I cannot wait to see Amazon's capital expenditures, the speed and the backlog of their Amazon Web Services. Apple, little bit of curiosity in terms of what they're doing with capital expenditures. If they're going to talk about artificial intelligence, if they're going to talk about Google, I'd be very interested in hearing some commentary there. Obviously, for people that are really interested in Apple, you want to hear about tariff effects, these sort of things. But for me, I'm not an Apple shareholder, so just mainly interested in to hear what else they have to do that affects markets in terms of stocks that I'm also interested in. Now up 270% on the day, 122.68. I mean, IPO markets are alive and well. It's absolutely delusional, though. Like, let's get this straight. This is not healthy. But yeah. If I'm not wrong, last new earnings were not good. So honestly, it's a little bit of a mixed bag. Their earnings were fantastic if you're looking at them from a foreign exchange neutral basis. Whenever you compared their dollar versus the US dollar, because they get reported in US dollars, then Nubank did not look good. Okay. But the difference between how much they grew on their end, which I think was like 38% year over year or 40%, whenever you converted it into US dollars, it looked like 10 to 12%. So that part did not look great. However, Q2 is a much different story. So I'm excited to see Nubank whenever they report. But for now, we are focused on a couple names. We got AAPL. We have Coinbase. We have Cloudflare. We have MicroStrategy or Strategy, Reddit, and Roku. Roku's not even on the list. That's how you know I do not care about this company. Insane. Reddit's up 2% going into the close. Roku's up 2%. Reddit up 7%. MicroStrategy up 2%. Cloudflare up 3.4%. Coinbase flat on the day. Apple down, falling into the close right now. SoFi's up 3%. Figma up 266% going into the close here in the next 7 minutes. Carvana ending the day, because they showed off earnings yesterday, up 16%. The other companies that ended up showing off earnings today, Grab down 7.66%, ARM down 13%, Qualcomm down 7.6%, Applied Digital up 29%, Meta up 11%, Microsoft up 4%. Jeez. Oh my. Also Robinhood down. Wow, guys. I cannot wait to see these earnings. We'll have them hopefully as soon as they come out. I don't have that software just yet. I should be expecting it over the next couple days, though, which is just unfortunate. So probably Monday in the next week's earnings, we'll be able to have that available. So that'll be for names like, let's see what is going on next week as well. We have Shift4, Pfizer, Lemonade. These are the names that I will at least be taking a glance at. AMD, Supermicro, Upstart, Toast, Rivian, Snap. Copang, maybe. Uber, Shopify, Disney, McDonald's, Oscar Health, Unity, Wix. Those will be the names that I will at least be following for the most part. I don't know if there's any in here that maybe I will like that are smaller names. I can't spot any of them. But yeah. And then AppLovin, Airbnb, IonQ, DraftKings, Elf, Duolingo. These are all next week. I mean, we are in the heat of earnings season. Oh my gosh. Ninja, Datadog, D-Wave, Crocs. Very, very exciting. But today, this is what we're focused on. Look how many names. Oh my gosh. That was just in the early part of the day. This is what we finish out with. So Amazon, Apple, Coinbase, Cloudflare, MicroStrategy, Reddit, Roku. Yeah. Enovix, which we can check out as well. Novix. I know that you guys really like that name as well. 5.9 in there. Yeah. Okay. Perfect. Bloom Energy also today. Well, we can check that one out as well. Yeah. BE. Yeah, there it is. Okay. Let's add those to the list then. And what was the other one that I said? We'll do Enovix as well. Novix. Okay, great. Ever bought Lulu products, Tanner? Oh, yes. It's like maybe the only clothing brand that I have been buying from lately. Yeah, I mean, you can't disregard the ABC pants for men. They're freaking amazing. How long till earnings? 4 minutes. 4 minutes till we have many of the reports out. Okay. Yeah, it looks like Amazon comes out right at the bell, or at least 4:01. Apple's expected to come out at 4:30. Coinbase is expected to come out at 4 o'clock on the dot, and Cloudflare expected to come out at 4 on the dot as well. So the only one that we'll be waiting for, it seems like, from the report that I'm seeing here, is Apple. 4:30 for Apple. Does that also mean that the call is at 5? No, it's just at 5. Interesting. Okay. All right, then. Let's make sure that we have Coinbase's IR up, as well as Amazon's and Apple's, even though we could probably wait on that for a bit. MicroStrategy. I mean, we could take a look. I don't follow that company. But yeah, the Apple hate is cringe. I'm just I don't follow the company. I don't buy any of their products. I don't know anything about them. They don't really help me with any of my other positions, and they're really expensive. Like, I don't know what you want to tell me, or what you want me to tell you. Maybe if they don't have flat revenue growth, I'll stop hating. But it's also not hate. Like, I don't even hate it. I don't have, like, the same way that no one has to be a buyer of the stocks that I like. I'm not going to be a buyer of Apple. I don't think that we can disagree that it has been disappointing in the last few quarters. Ladies and gentlemen, the markets are about to close. Let's get ready here. We're going to watch the markets close. We're following all of these names here, mainly Amazon. Let me just refresh that, put that to the top. Okay, it did absolutely nothing. There we go. Okay, this is the main one that I'm following. Amazon. Very curious about AWS. Very curious about Prime Day sales, these sort of things. We already know for the most part what that's done for it, but capital expenditures, how capital expenditures are broken down. Yeah. Very, very curious. Okay. Let's get ready to rumble. And the market is officially closed. Let's go hunting for these earnings. Okay. Trump administration to expand price support for U.S. rare earth projects. Interesting. Let's see here. Reddit up a little bit in the after hours, 0.45%. MicroStrategy, relatively flat. Cloudflare up 1% in the after hours. Let's see if we can find anything. I don't see anything posted just yet. No numbers just yet for Cloudflare. This could just be some excitement. Why, oh, hello, Amazon. Now down 1%, down nearly 1.8%, 2%. Oh no. Let's see if we have some numbers here. Still nothing on my end. I don't have any reports on these companies just yet. Nothing quite yet. So for I mean, it's back up. So I think the market's just freaking out right now. Let's see. Fake moves. Could be fake moves. Algos are tweaking. Roku up 5%, 7%. I don't think that is just freaking out. I think there might be some actual news here. We don't have anything just yet that's being reported. MicroStrategy numbers are out. Let's go to MicroStrategy. They are doing decently. Earnings per share was expected to be at 7 cents. They did $32.60. A beat by 46,000%. Well, revenue had beat by 2%. Gotta love that, eh? But that might be some sort of error there, because now I don't follow the company, so I don't actually know what makes like how the actual reporting for their Bitcoin actually turns out to turn into EPS or not. Amazon numbers are out though. EPS, wow, shattering, up 27%, massive beat. Actually, year over year up 33%, but it beat by 27%. $1.32 expected. We got $1.38, and revenue beat by 3%. 162 billion expected from Wall Street. We got 167.7 billion. Let's go deeper into those numbers whenever they release. I'm going to refresh their investor relations. Still nothing updated there, but currently Wall Street seems to see something in the Bloomberg terminals that are they're not liking. Maybe that's increased capital expenditures, damaging free cash flow. Maybe this is Amazon Web Services. That's going to be a big part of contention for these big names like Amazon. If the growth rates are not going up the way that they're going up for Azure or Google Cloud, the freaking market's going to hate that. Now, we are flattening out. We're not seeing that negative 2% quite as badly as we were seeing before. Let's go take another look for... okay, we got real numbers on Amazon now. So like we said, sales, big beat, EPS beat, operating income did 19.2 billion, expected 16.77 billion. AWS net sales, slight beat, only by $100 million, 30.87 versus 30.77 expected. That's probably where we're seeing a little bit of contention here. The beats on AWS, not as significant as what you'd probably suspect. Andy Jassy commentary, though. Our conviction that AI will change every consumer experience is starting to play out as we're expanding Alexa Plus to millions of customers. Continue to see our shopping agent used by millions of customers. Launched AI models like Deep Fleet that optimize productivity paths for our 1 million plus robots. Made it much easier for software developers to write code in Kiro. Launch strands to make it easier to build AI agents, and release Bedrock Agent Core to enable agents to be operated securely and scalably. Our AI progress across the board continues to improve our customer experience, speed of innovation, efficiency, or operational efficiency, and business growth. And I'm excited for what lies ahead, says the current CEO of Amazon, Andy Jassy. North American sales were up 11% year over year, operating income of $7.5 billion. Yeah, I mean, so far that looks great. Yeah, it's probably just cloud that people are a little bit not so happy with. Bloom Energy down 6.8%. Roku up nearly 4%. Reddit flat so far. Apple's going to be flat if they're not reporting till 4:30. And Coinbase down 3%. Let's see if we can get numbers on Coinbase here in a second. And I'll refresh their investor relations. Yes, we have. Or do we have it? Sorry, I'm just checking out. I do have the Q2 shareholder letter that was just released. So although Coinbase is down 3.5%, let's go take a look. I also need to check out what Wall Street was expecting. I actually don't have this name. I have it in the stock draft, but it's not in my own portfolio. Bad miss, I guess. This should be a name that I understand very well, and yet I don't know. There's been some short-term things on the reason why I haven't purchased them, like their take rate on crypto that I just think Robinhood does so much better on, and I worry about them for this. But revenue was expected to come in at $1.57 billion, getting 1.5 there. EPS of $1.14, and we'll have to break that down into what it was from an EPS perspective. But let's see if there was any comments that were made from Brian Armstrong here. I think they're mainly just going to talk about, total revenue down 26% quarter over quarter. This happens in crypto, right? Transactional revenue down 30. Dude, that's crazy. So total revenue down 26%, while transactional-based revenue down 39%. So that means subscription revenue took a large part of that. Wow, dude. I want to see what their stablecoin volume was. Consumers did 650 million, while institutions only made them 60.8 million. Where is the volume, though? I want to check that. Stablecoin revenue, 332.5. Insane. Blockchain rewards, that's doing well. Other subscription and service revenue also includes staking, if I'm not mistaken. They used to break it out, but they've just started to integrate that with the rest. Coinbase down 5% now. 7%. Big misses on coin. Well, not big misses in their numbers, but there's something in there that people do not like. Roku, by the way, revenue beat up 15% year over year. EPS, though, was the absolute killer. Why the stock is doing well. Not Reddit. However, they're up 10% as well. Roku up 5%. EPS came in at 7 cents. Expectations were negative 16 cents. The difference of negative 16 and they actually coming in at 7 cents. Insane. Net income did 10 million versus negative 38 million expected. That's nuts. Adjusted EBITDA up 39% year over year, and streaming hours hit 35.4 billion, up 5.2 billion hours year over year. Wow. Guidance increased. Our monetization initiatives position Roku to sustain double-digit platform revenue growth while increasing profitability. With improving adjusted EBITDA and strong free cash flow, we are announcing a $400 million stock repurchase program, and we are confident in our strategy to grow broadband household penetration, ad demand, and subscriptions. That's what's going on with Roku right now. Reddit, on the other hand, that's up, 8.6%. $500 million in revenue, up 78% year over year. Oh my gosh. And EPS coming in at 45 cents with expectations only being at 20 cents. That's a more than double of what they were actually expecting. Wow. Wow, wow, wow. Reddit is built for this moment. In a world where connection is increasingly rare, our community shows how valuable human conversation and knowledge really are. We focused on growing globally, growing globally, scaling sustainably, and making Reddit the most trusted place on the internet. I mean, I'll give it to him. EPS beat by 137%. Revenue beat by 17%. This is a very misunderstood name doing that freaking well. Coinbase, on the other hand, beat on EPS by 245%, but missed revenue by 6%. There's something in this report that I honestly just don't have time to go into it granularly. But overall, wow. Let's go back to Amazon really quickly, down 2.6%. It doesn't look like they've missed too much other than a very, very, very slight beat on AWS, which is probably why people are getting a little bit frustrated right now with this company. Because not that a beat is bad, but that, Azure did so well. Google Cloud did so well. Azure being by far the best. I mean, expecting like 39% growth going forward, that's just insane. So for AWS to do, okay, year over year, 17.5% growth, whatever. AWS's actual margins, though, are like 33% this quarter, which is actually a little bit of a pullback quarter over quarter. 39% is what they did last quarter. So I could see a little bit of hesitation on AWS, which is definitely surprising. Let's hear what Andy Jassy has to say in the next little bit. We'll read through some of his reports, but oh my gosh. Roku up 7.8%. Reddit is the big winner, I think, guys, for the day, up 10%. MicroStrategy up 1.5%. Cloudflare flat. Coinbase down 8%. They might be the big loser today. Sounds like Coinbase is introducing tokenized stocks. They definitely will. I mean, they applied to the SEC to be able to do that even here in America. Alphabet didn't report today. If there's something going on with the stock, we can take a look at that. But yeah, they're just flat. They didn't report today. They reported the other day, but they did very well. Apple will report in the next little bit, 4:30 or so. So they'll just be flat for a little while. Coinbase, oh my gosh. Is this the time to buy in, though? Do we believe in the long-term potential for Coinbase? Do you believe they're going to do well? Or do you think that they're wasting their time on social media efforts and stuff like this? Yeah. Nick, you are right. Reddit is not the big winner of the day. Let's see what Fig is doing after market. After hours, up 4% after being up 250% on the dot today. But honestly, though, you got to give it to Reddit. That, I would never think about being a Reddit shareholder. I just don't use the product enough. But oh my gosh, I mean, if you're going to pull out numbers like this is just incredible. Absolutely incredible. Why are we so smushed like this? I hate that I'm in dark mode and I can't see the things. I think I just have to reset it. Yeah, there we go. There we go. MicroStrategy up 1.2%. Cloudflare, the numbers must be out. Let's go hunting for those now. I just got more of the report from Coinbase, so we can read through some summaries here as well. Consumer trading volume was down 45% quarter over quarter. Institutional trading volume down 38% quarter over quarter. That's surprising. Institutional trading volume being down this low, that is surprising, especially with the price amounts that like we hit some pretty high prices in Bitcoin and in let's see. Sorry, I got distracted. Stablecoin revenue up 12% quarter over quarter. That's going to be one that, honestly, guys, we just need to continue to pay attention to. Oh my gosh, Cloudflare up 6%. We need to stop what we're doing and go look for Cloudflare numbers. Arthur J. Gallagher also reported today miss on both top and bottom line. Cloudflare EPS, wow, 21 cents versus 18 cents expected. Okay, revenue beat by 2%, EPS beat by 17%. Revenue was up 28% year over year, and EPS is up 5% year over year, but also 31% quarter over quarter. I know that this is a name that Roy has been really looking into, very interested in this name. Coinbase still falling. Let's try to get some more coverage on Coinbase, though. There must be something that is tearing people apart, because we all knew going into it what the volumes on Coinbase was. So what is it inherently that Coinbase did wrong that was not priced in from the actual macro of the trading volume that crypto assets had seen? Clarity Act passed in the House, which is the framework for stablecoins and tokenized assets. That is obviously very big for them. CEO said, Brian Armstrong said, Q2 marked meaningful progress across all phases of crypto adoption, investment, financial services, and app platform. We're building the financial system on chain, and our positioning is stronger than ever with new regulatory clarity. They have a new license that was secured in Luxembourg, and Coinbase has expanded across 30 EEA states. Assets under custody were at a record high. Q3 outlook was better than expected. And transaction revenue for July, $360 million. Technology development and general and administrative expenses expected to be at $800 to $850 million. I don't see the big miss. Does anyone else see what it is? Amazon down 4% now. Their guidance was a miss on operating income. Operating income for their guidance missed by 7.5%, while revenue is expected to be 2% higher than what Wall Street has expected. They have $62 billion in cash, $51 billion in debt. Let's see some capital expenditure comments from Amazon. Let's try to get a hold of this shareholder letter. So they still don't have the actual presentation, which on Amazon actually sucks anyway, so who cares? But we do have the press release. So let's switch on over to there. And we'll get some insight here. Net sales increased 13%. I don't think we need to talk too much about this. We've already known that. North American segment sales increased 11% to $100 billion. I mean, these are just insane milestones. Obviously, in Q4, I'm pretty sure they were at those levels as well, but still. Net income increased, operating cash flow, free cash flow decreased to 8.2 billion for the trailing 12 months compared to 53 billion for the trailing 12 months. So that's going to be on capex for sure. But where is it? Hello? AWS. I'm pretty sure all the margins were better than expected as well. Other than AWS. AWS's margins had fallen. Shares are looking better. Actually, sorry, I was looking at it wrong. There's a little bit of share dilution still, so they didn't do any buybacks this time, which for them is not always the case. They're not like Apple or Google, where they have these buyback programs that are consistent. Apple or Amazon does very choosy times to purchase. Held its biggest Prime Day event ever. Announced expansion of same-day and next-day delivery to tens of millions of U.S. customers to 4,000 smaller cities. We've already known all this. Expanded to new brands. Announced a Nike storefront on Amazon.com. Expanded Alexa Plus early access to millions of customers. Increased Project Kuiper's satellite internet fleet in low Earth orbit. We knew that as well. Supposedly, they're tapping SpaceX now for their new launches. That'll be interesting. I don't think I'm wrong on that. Someone can correct me in the chat, but yeah. Nice. My Amazon DCA buy set for tomorrow. So that's a W. Yeah. Hey, if you're a long-term Amazon shareholder, this is no problem at all. I mean, we'll have to see what Andy Jassy ends up saying, but there's nothing too much in here that sticks out as being terrible. Obviously, if you're looking at free cash flow, you're going to say the exact same thing about Google, which did end up spiking down like 3% while the numbers ended up getting put out. But then once it actually rolled out, and they were talking about what they were doing with the money that they're actually spending, that the backlog on Google Cloud was like $108 billion. The stock actually ended up 3%. It was like a 6.5% or 7% swing just because the call gave so much additional understanding of what the company or what the quarter actually ended up showing off. Introduced Deep Fleet. I remember reading about this. That's very, very exciting. Vulcan, yeah, that's the one with touch, right? Amazon's first robot to combine sight and touch. Announced 700,000 plus employees participating in upscaling programs. Yep, for artificial intelligence, robotics, stuff like that. Launched new robotics and engineering apprenticeships for U.S. employees. Announced 134,000 plus employees in 55 countries participating in Amazon's Global Month of Volunteering. All right, well, we're getting a little bit just in the weeds now. Okay, great. Great. Cloudflare, really quickly. Let's head back to the thing here. Up 7.8%. Revenue beat, guidance beat, adjusted EBITDA, adjusted net income and EPS also beat. Across the board, looks great. Free cash flow positive, 33 million at a 6% margin. Lots of cash on hand. CEO said, "We're innovating faster than ever. Our largest customers are growing investment at the highest level since 2022, said Matthew Prince. We're firing on all cylinders with the right technology, strategy, and team to accelerate to the next phase of growth. Up 7.3%. Holy. Figma, by the way, over 120, still holding that price. Up 250% today and going higher in the after hours. Amazon down nearly almost 4%. Reddit up 12.8%. Man, I got to do some deep diving into Reddit here. Wow. Apple up 1%. I think they report in the next 5 minutes, if I remember correctly. So we don't have any numbers on them just yet. Not that I can see, at least. However, it could be running on this news. Trump just made a couple of other trade deals a little while ago. I know that that's worded weirdly, but that is the quote. We just made a couple of other trade deals a little while ago. We'll have to see. So maybe that'll pull Amazon out of the gutter here a little bit. And Novix down 8.5%. Bloom Energy flat. Roku up 4%. Reddit up 12.7%. But that commentary from Trump is probably going to lead the entire markets just a little bit higher. AJG is also reporting today. They're flat on the day. Nothing too much to see there. Reddit up 12.5%. Crazy. And they said Google search is hurting Reddit, lol. Who knows? Might be the other way around. Congratulations if you guys are into that position. MicroStrategy up 1%. Cloudflare up 7%. Let's see if we can get some more news here on these names. But we might just have to wait a minute or two until we actually end up seeing. Oh, no, never mind. Until we end up seeing Apple's numbers. Apple staying up in the after hours, but nothing too much. Amazon is red and Apple is green. What a day. Well, I mean, high expectations as well. You see the growth on Azure, GCP, and you expect that it's across the board. 17.5% is growing, but it's not like what Azure is doing. Honestly, Satya Nadella is just crushing the game right now. Something that should be admired. Maybe I'll end up taking a position in Microsoft even at these levels. Because how can you grow cloud at 39? Like, it's just insane. So they might actually end up being the biggest player over the next multi-year time frame. Who knows? Amazon's still down. Let's see if we can get some more commentary from Andy Jassy here. Or let me go to their operating cash flows, purchase of property and equipment. No, this must be. Where is on a quarterly basis? Because now we're up to 100 billion, I think, of. Yeah, trailing 12 months, we're at 103 billion. Oh my God. On a TTM basis. But where can I find purchase of property and equipment, not trailing 12 months? 3 months. There we go. $32 billion. Now, that's not like Meta and these types of names where it's mainly chips. There also is like the warehouse plans that Amazon actually has and doing these types of things, like expanding into 4,000 cities. I mean, those are massive capital expenditure projects. So that will end up costing them quite a lot in order to build out. But let's see what else we can see here in their actual operating numbers here. Actually, let me just go to Fiscal AI and see if they actually end up having it, because I want to see what their advertising has done and the individual segments, if they have those numbers up yet. Quarterly. They do indeed. On advertising did 15.7. Oh my gosh. $15.7 billion, up 22.9% year over year. That's a massive acceleration on Amazon's advertising services. Physical stores were up 7.5%. Online stores up 11%. Wow. Subscription revenue up. Subscription revenue up 12.4%. Wow. That's very interesting. So if we wait, let's just look at this really quick. I want to show you guys this. And we'll sort of plug out all of Amazon's earnings here. Let's just stack this all up. And where am I missing one? Bing, bang, bang, bang. Oh, it's not putting in other revenue right now. Oh, they haven't updated that. Okay, let me take that out because that's going to throw off what it looks like. So these total numbers are not correct, but the actual growth rates here in the compounded annual growth rates is correct. And what you can see here from advertising revenue is that we're up 22.9%. That's just incredible off of the June 2024 numbers here. Unreal. Very cool. Amazon making a little bit of recovery. I wonder if Apple up also 2% now. Their numbers should be out. Apple is out. EPS beat by 10%. Revenue beat by 5%. Wow. Revenue up 10% year over year and EPS up 12% year over year. That's pretty good. I think this pushes higher. I think that probably gets the market excited. Let's watch Apple climb here. And see if I can end up pulling up their fiscal third quarter results. Service revenue reached an all-time high for Apple. Yeah, their call's at 5, but I don't want to listen to it. I want to listen to Andy Jassy. Today, Apple is proud to report a June quarter revenue record of double-digit growth in iPhone, Mac, and services and growth around the world in every geographic segment, says Tim Cook. We were excited to introduce a beautiful new software design that extends across all of our platforms, and we're introducing even more great Apple Intelligence features. We are pleased with our record business performance for the June quarter, which generated EPS of 12%. Our installed base of active devices also reached a new all-time high across new product categories and geographic segments, thanks to our very high levels of customer satisfaction and loyalty. I mean, that is true. Definitely, that is true. They also declared a cash dividend of 26 cents per share. The dividend is payable on August 14th. Cool. However, there might be something in these numbers that people don't like. Apple Intelligence. Supposedly people like it. Marquez Brownlee ended up doing a video review of the new iOS 17, and he did say it's definitely better than what it was in the previous updates. And here we see $44 billion in Apple or iPhone sales versus 40 expected. Mac at 8 billion versus 7.2 billion expected. Services of 27.4 billion versus 26.8 billion. Miss on iPad and wearables. Who really cares? Those smaller segments. Greater China sales at 15.37 billion versus 15.1 billion. Estimated American sales of 41 versus 37. Amazon can dump, I'll buy more. I also think that's, I mean, always underwrite your investments. But after this call, if there's things that you don't, or there's things that you don't see are worth selling off the business at a 3% clip, yeah, I mean, these are the dips that you buy if you're a long-term holder of some of the Mag 7 names. Less iPad kids. It's because the phones are just getting bigger now. You can just hand the kids a phone. They're fine. The developing world will want iPhones eventually. Yeah, they're getting around to it, eh? Let's see a little bit more on... Yeah, I cannot believe the advertising services changes for Amazon. 23%, AWS 17.5%, subscription services 12%. That's just insane. And other is at 1.5 billion, a 19% change. The part that wasn't showing up on Fiscal AI was at 1.5 billion. Okay. Let's make sure that we get some more Apple commentary here before we jump into Amazon's call as well. Oh, Rocket Companies also reported today. Really? Oh my gosh. Rocket Companies up 4%. This is one that I wish I had on the list. Adjusted revenue up 9.1% year over year. A roughly $70 million beat from 1.37 billion. So not huge. EPS, although down year over year, was 4 cents. Expected was 2.6 cents. So that was a decent beat there. Adjusted EBITDA 172 million, expected 130 million. Their net rate lock-in volume was at 28.4 billion and 27.4 billion was the expectation. So 13% up year over year. And closed loan origination volume was 29.1 billion, 28.2 billion expected. That was up 18% year over year. Let's just read a little bit of the commentary there, and then we will get back to Amazon, which is still down 3.2-ish%. Apple up 1.66%. Reddit up 15.2%. Aside from Figma, that's the real winner of the day. Okay. But yeah, let's get back to Rocket really quickly because I am interested in this name, especially for companies like SoFi or Opendoor or any of these names that you want a little bit more clarity on. It's always good to hear from the other fintechs in the home lending space. My cat's trying to get out of the room, so I got to hurry here. Q3 sees adjusted revenue of 1.6 to 1.75 billion. Gain on sale margin was actually lower year over year. I'm surprised about that, considering we have had rate cuts within the last 12 months. Segment performance, direct-to-consumer was up 11% on a revenue basis. Partner network was down 21%. Direct-to-consumer loan sold loan gain on sale margin 4.4%. 4.1% was the expectation. 4.1% was the year-over-year comparison. Better gain on sale margin. That makes more sense to me. CEO said Rocket delivered a standout second quarter, exceeding the high end of guidance. Our purchase funnel is expanding, conversion rates are rising, and Redfin clients are beginning to close with Rocket. Strategic and operational updates. They closed all stock acquisition of Redfin, expanding integrated offerings, introduced AI-powered refinancing tools, complete end-to-end refi in under 30 minutes, launched an AI agent for earnest money deposits, processes 80% automatically, and released Rocket's preferred pricing 1% discount on up to $6,000 credit for Redfin-linked buyers. That's the expectation with a good acquisition, right? Is that you want to also wind down of Rocket Mortgage Canada and Visa signature credit card program. So buy Canada. Let's go see Amazon down 3%, but happy that we picked up on what Rocket had to say there. Trump did say we just made a couple of other trade deals a little while ago. I'm interested to see if that sort of has been bringing us off the bottom here a little bit. Reddit. Oh my gosh. Wow, that's up 7.5% today and then up another 18.6%. But the quarter just dominated. Like over the last 5 days, you're up 29%. Wow, bro, that's blowing my mind. I should really look into this name. I think that'll probably be the next like deep dive that we end up doing. That's in 5 days. But the results speak for themselves. I mean, they crushed it, bro. Like Meta looked like they showed off great numbers, and then Reddit comes in and beats on EPS by 137%, beat on revenue by 17%. Do you know how misunderstood your business has to be by missing on revenue by 17%? That is insane. EPS is up 850% year over year. Revenue is up 78% year over year. On Reddit. On Reddit. Incredible. As a creator, do you make money on Reddit? Probably not. I mean, that's how they probably have these high margins. Stryker was another company with earnings out today. They beat by 2% on both revenue and EPS, by the way. CLA also beat EPS by 10%, revenue by 3%. Clack. Down 0.9 after dropping 5% today. Wow. Wow. Let me make sure I get the Amazon earnings call here ready, which should start with in the next 15 minutes. And Coinbase, let's take a look at Coinbase. Recovering like crazy. Wow. Only down 3% now. They were down like 8+% earlier. Okay, my cat's going crazy. 1 second. Let me just kick him out. Okay, we're back. Started like biting plastic and stuff. Can't have him freaking out. Thought he could just chill with the boys, looking at the stock prices and, getting excited for our portfolios dropping on Amazon stock today. But no. So Apple does not show guidance until we actually end up seeing the call, by the way. But revenue beat, gross profit margin beat, EPS beat, guidance to come. Pretty interesting. Pretty interesting. Daily active users remain strong for Reddit. There was a brief scare with Google's algorithm tweak that slowed referral traffic, but Third-party data now shows that site visits have been stabilizing. Wow. Daily active users continue to tick up. And initial metric flag for labor productivity gains that drop straight to the bottom line at a $1.4 trillion global ad TAM by 2027. And data licensing dollars from newly inked OpenAI and Google deals. And management has multiple ways to deliver upside on revenue while keeping OpEx contained. Wow. Wow, wow, wow. Coinbase now down just 4%. Amazon staying quite flat here in this range. They seem to be holding this -3%. We'll have to see what the call actually says. Andy Jassy, usually someone I love to listen to. Enovix down 7.5%. Bloom Energy down 2%, but that was a quick recovery from what looked like a massive sell-off. MicroStrategy down 1%. Reddit up 19%. Bro. Is the call happening for Amazon? No, not just yet. We got 14 minutes. So it's just music that we hear right now. But they are showing off some slides. But I mean, these are just, garbage PowerPoint slides. But yeah. But we will end up going through the call whenever it is live. And there will be music in place of this. Now, free cash flow, as you can see here, down a lot, but that's just because CapEx is just going like crazy right now. Net income up 59% year over year. You guys realize that? Like going from 44 billion to 70.6 billion year over year? There's a lot of company market caps that fit in between those two numbers year over year. Absolute beast, Amazon is. Absolute freaking beast. Rocket up 5%. Figma up 6.6%. But guys, what do you want? What does Reddit do? They're like a social media platform. You can go on and it's like like if you remember back in the day, early internet where everything was forums. Reddit is like the all-in-one place to find every single forum. So a place to share videos, share images, to share text, to ask questions, to get advice, to do all these sort of things. Yeah, but then they can turn that into advertising dollars. A lot of AI companies will be very interested in trying to learn from all that data because a lot of people post on there and they have, hundreds of millions of users. So, yeah. Didn't Reddit miss? I'm confused. No, Reddit had a massive beat. Massive beat. They more than doubled EPS than expected, and they beat revenue by like 19%, 17%, something like that. Apple did very well also. We have to give credit where credit's due. But yeah. I cannot believe Figma right now going up another 7.6% in the after hours. Isn't that nuts? Like you have all these companies showing off their earnings and people are in the after hours are saying, you know what I'm going to buy? I'm not going to buy Reddit. I'm not going to take advantage of the sell-offs of Amazon or maybe want to buy back into Apple because, maybe there's a turnaround going on or something like that. No, I'm going to buy more Figma. The company that's up 250% during the day and another 8% on top of that. So 124.75. Like, you're pricing the company at over $60 billion. And they were just getting bought out not long ago for 20. What is Blue Owl's ticker? Blue Owl. It's something weird. Oh, no, it's just Owl. Absolutely flat. Amazon's starting to recover a little bit, only down 2.4%. If anyone wanted to buy the dip, let's hope it was at this down, 4.4%. I don't think, this is just my opinion, I don't think Andy Jassy is going to say anything that sours the market worse than what we had just experienced. We beat across the board here. I'm so it's like 4chan. I guess it's probably a little bit more curated than 4chan, but yeah. But I think that this, if I were to take a guess, I mean, I don't know what is to be said on the earnings call, but if it's anything like the Mag 7 names, that the earnings call have done the companies a lot of favors. Okay, Q&As have done these companies favors. There hasn't been a lot of things that have been said that have soured expectations for Wall Street. So that's the only thing that I'm like, you know what? Tanner, are you adding SoFi around these prices? I actually am. I'm back to being a buyer. Any news on an acquisition, Tanner, for SoFi? A little bit. I have a video coming out tonight. So I've already recorded it. But yes, we weren't completely wrong on them using the money for an acquisition. The truth is that they just don't quite know right now. Blue Owl buys SoFi loans. Very true, but it's also a small percentage of the actual assets under custody that they have. Maybe you'll get a quick shout out, but it's not going to be like the earnings call or the commentary about the about Blue Owl's earnings is going to be surrounded by, SoFi. Yeah, Amazon's starting to recover. Only down 2.1% now. I think this was the dip to have been purchased up. I could be wrong. I just went long 150 shares just below 225. I mean, Michael's the trade goat. Or sorry, 224. That's right here. Here he's saying he bought here. It's a very good time. Tanner, how did you come across Nubank? Seems like you've been on it for a very long time. My buddy of mine, Chris Patel, told me about the name. Funnily enough, Chris Patel was the original guy that told me about Nubank. Now, he never really held it, I don't think. But he was talking about it and like why they're different or similar to SoFi in a certain way. And I think just brought them up as an example. And then I just ended up looking into them and being like, oh my God, this is an insane business. And I ended up buying in at like 381, I think was my first purchase. Which, looking back on it, I should have purchased a lot more than I already have. Will you be streaming the Amazon conference? Absolutely, ladies and gentlemen. The title is real. We will be listening into the earnings call. That starts in 5 minutes. 5 minutes. Figma up nearly 10% in the after hours after being up 250%. I don't know what is like, I don't know the drugs that are being taken. I don't know what's going on, but that's insane, guys. This price of being up 10% is, by the way, is the increase in the price of where it closed at, not where it went public at, right? So the increase in the price has gone from 115 to 126. That's an $11 price increase. It went public at like 30. So that would really be like a 33% plus move in the after hours. It's nuts. It's a 10% increase on where it closed at. This live, what, do you want me to just say your name? Yes, this live. Roku down 3.5% after being up quite a lot. We'll have to see later on what people had found out about that. I'll try to do that while Amazon is going on, but only down 2% now. That is quite the recovery from being down almost 5%. You live? Yes. Yes, very live. The Figma FOMO is crazy. I won't be touching that at all. Rocket is now up 6.7%. AJG flat. Figma up 8%. Amazon down 2.3%. Novix down 5.2%. Bloom Energy down 5%. Roku down 2.6%. Reddit up 14.6%. Coming down off those insanely large highs. I thought we were going to, well, actually, we probably did break past, 20% in the after hours. And by the way, guys, this is not even the high for the business. They're not breaking highs. They were actually much higher and then ended up crashing with, honestly, what might have been a Trump election. But now starting to improve. MicroStrategy up 1%. Cloudflare up 4%. Coinbase down 6%. Apple up 1%. A lot of flattening out. I wonder if there's another Trump comment here because, yep, there was. I knew it. Once everything starts turning sour at the same time, Trump had something to do with it, right? Same thing with going up, but Trump said, I made a big mistake appointing Powell as Fed chair. He's a fool and a political hack. Ray Dalio has officially sold his last stake in Bridgewater and stepped down from the board. Oh my gosh. Brunei's sovereign wealth fund now owns nearly 20% of the firm. Ray Dalio says that he'll stay on as a client and a mentor, but his ownership era is over. Someone created a new account to then donate. You live? Let me in, Tanner. No. Your cat doesn't even know the name of my cat. Do you think you'll still be here in 10 years? Where will you be? I've got no clue. If I would have bought Figma shares, maybe I'd be somewhere else right now. But no, I'll be here for a while. I love what I do. Being able to come on here and watch the markets go up and down, commentate on it, learn about what makes companies tick. I mean, that's the best. But ladies and gentlemen, the call is about to start. Let's make sure we are jumping over. Ray Dalio did lose on betting on China and sort of crapping all over America and saying that we're in a super cycle. I think a lot of people were, and honestly, he might be right. Who knows? But the timing of it did not bode well in his favor. It looks like we're in America super cycle right now. But Ray Dalio's a legend. I got his book behind me, actually. with all the actual notes and stuff that I have in it. That's how you know that I actually read it. Okay, call's about to start here in a second, and we will see. Hope this is more interesting than the Tesla earning. I can almost guarantee that. I can guarantee that. Um, if an acquisition is in the future for SoFi, do you think that they could be further dilution in the form of stock payment, either partial or full? Definitely possible. The hope is that the return. So, guys, the video that I have coming out today, I mean, my research in whenever I did the video blew my mind away. I'm more bullish on SoFi than ever. The EPS of 55 to 80 cents, I think, is way too low. And I actually think that they're going to start bumping that up a lot. So, but actually, the call is starting. So let's get started. Ladies and gentlemen, enjoy.
25 financial results teleconference. At this time, all participants are in a listen-only mode. After the presentation, we will conduct a question and answer session. Today's call is being recorded, and for opening remarks, I will be turning the call over to the Vice President of Investor Relations, Mr. Dave Files. Thank you, sir. Please go ahead.
Hello, and welcome to our Q2 2025 financial results conference call. Joining us today to answer your questions is Andy Jassy, our CEO, and Brian Olsavsky, our CFO. As you listen to today's conference call, we encourage you to have a press release in front of you, which includes our financial results, as well as metrics and commentary on the quarter. Please note, unless otherwise stated, all comparisons in this call will be against our results for the comparable period of 2024. Our comments and responses to your questions reflect management's views as of today, July 31st, 2025 only, and will include forward-looking statements. Actual results may differ materially. Additional information about factors that could potentially impact our financial results is included in today's press release and our filings with the SEC, including our most recent annual report on Form 10-K and subsequent filings. During this call, we may discuss certain non-GAAP financial measures. In our press release, slides accompanying this webcast, and our filings with the SEC, each of which is posted on our IR website, you will find additional disclosures regarding these non-GAAP measures, including reconciliations of these measures with comparable GAAP measures. Our guidance incorporates the order trends that we've seen to date and what we believe today to be appropriate assumptions. Our results are inherently unpredictable and may be materially affected by many factors, including fluctuations in foreign exchange rates, changes in global economic and geopolitical conditions, tariff and trade policies, and customer demand and spending, including the impact of recessionary fears, inflation, interest rates, regional labor market constraints, world events, the rate of growth of the internet, online commerce, cloud services, and new and emerging technologies, and the various factors detailed in our filings with the SEC. Our guidance assumes, among other things, that we don't conclude any additional business acquisitions, restructurings, or legal settlements. It's not possible to accurately predict demand for our goods and services, and therefore our actual results could differ materially. Call over to Andy.
Thanks, Dave. Today we're reporting $167.7 billion in revenue, up 12% year over year, excluding the impact from foreign exchange rates. Operating income was $19.2 billion, up 31% year over year, and trailing 12-month free cash flow was $18.2 billion. We saw good progress across our various customer experiences and businesses this past quarter. Starting with stores, we feel good about both the inputs and outputs of the business. At Amazon, we think of our business in terms of inputs and outputs. Outputs are metrics like revenue or operating margin, but of course, you can't manage at the output level. It's the inputs that drive the outputs. So we spend virtually all of our time internally talking about and goaling against inputs. The inputs that matter most to customers in our stores business are selection, low prices, and speed of delivery. We've taken another step forward in selection these past few months, headlined by the much requested return of Nike's products to Amazon's retail store. We've added premium brands like Away, Aveda, Marc Jacobs fragrances, and brands from Saks on Amazon like Dolce & Gabbana, Etro, Stella McCartney, Rosetta Getty, and La Prairie. And we started expanding our very successful perishables pilot, where we offer customers perishables at the point of purchase when they're ordering other items that will be delivered same day from our same-day fulfillment nodes. We're seeing strong customer adoption as 75% of customers who've used the service this year are first-time shoppers for perishables on Amazon, with 20% of customers who use the service returning multiple times within their first month. Our prices continue to be low and sharp for customers. It's one of the reasons our everyday essentials growth outpaced the rest of the business globally and represented 1 out of every 3 units sold. It's also why well-known research firm Profitero has concluded for 8 years in a row that Amazon has the lowest prices of any U.S. retailer. But perhaps the clearest outputs are the rate at which our stores business grew this past quarter and the success we saw in our recent Prime Day event. This year's Prime Day was our biggest ever, with record sales, number of items sold, and number of Prime signups in the 3 weeks leading up to the Prime Day. Customers saved billions of dollars, and independent sellers, most of which are small and medium-sized businesses, saw their best sales performance of any Prime Day event yet. There continues to be a lot of noise about the impact that tariffs will have on retail prices and consumption. Much of it thus far has been wrong and misreported. As we said before, it's impossible to know what will happen. Where will tariffs finally settle, especially China? What happens when we deplete the inventory we forward bought or that our selling partners forward deployed in advance of the tariffs going into effect? If costs end up being higher, who will absorb them? But what we can share is what we've seen thus far, which is that through the first half of the year, we haven't yet seen diminishing demand nor prices meaningfully appreciating. We also have such diversity of sellers in our marketplace, over 2 million sellers in total, with differing strategies of whether to pass on higher costs to consumers, that customers are advantaged shopping at Amazon because they're more likely to find lower prices on the items they care about. Further improving delivery speed remains a key focus, and we continue to make progress. We've previously shared how we re-architected our U.S. inbound network into a regional structure, allowing us to place inventory and ship from locations closer to customers, improving speed and lowering costs. That work is delivering tangible results. In Q2, we've increased the share of orders moving through direct lanes where packages go straight from fulfillment to delivery without extra stops by over 40% year over year. We've also reduced the average distance packages traveled by 12% and lowered handling touches per unit by nearly 15%. We've made progress on order consolidation. With more products positioned locally, we're able to pack more items into each box and send fewer packages per order. That has helped drive higher units per box and improved overall cost to serve. Taken together, these improvements are making the network faster and structurally more efficient. We've also set another global speed record in Q2, delivering to Prime members at our fastest speeds ever. In the US, we delivered 30% more items same day or next day than during the same period last year. Items customers used to pick up locally in nearby physical stores are now arriving at their door, often within hours. And we're working to further improve delivery speeds no matter where customers live. We've recently announced plans to expand our same-day and next-day delivery to tens of millions of U.S. customers in more than 4,000 smaller cities, towns, and rural communities by the end of the year. Today, it's already available in more than 1,000 of these communities across the U.S. The early response from customers in these areas has been very positive. They're shopping more frequently and purchasing household essentials at meaningfully higher rates. Automation and robotics are also important contributors to improving cost efficiencies and driving better customer experiences over time. We deployed our 1 millionth robot across our global fulfillment network and unveiled innovations at our Last Mile Innovation Center, such as automated package sorting and a transformative technology that brings packages directly to employees at an ergonomic height. We rolled out Deep Fleet, our AI improves robot travel efficiency by 10%. At our scale, that's a big deal. Deep Fleet acts like a traffic management system to coordinate robots' movements to find optimal paths and reduce bottlenecks. For customers, it means faster delivery times and lower costs. For our team members, our robots handle more of the physically demanding tasks, making our operations network even safer. This combination of robotics and generative AI is just getting started. And while we've made significant progress, it's still early with respect to what we'll roll out in the next few years. Moving on to Amazon Ads, we're pleased with the strong growth, generating $15.7 billion of revenue in the quarter, growing 22% year over year. We continue to see strength across our broad portfolio of full funnel advertising offerings that in the US alone help advertisers reach an average ad-supported audience of more than 300 million across our own properties. These are properties like our retail marketplace, Prime Video, Twitch, and Fire TV, in live sports such as NFL, NASCAR, and the NBA, as well as third-party websites and apps. Another area we're excited about is our demand-side platform, or Amazon DSP. Our DSP enables advertisers to plan, activate, and measure full funnel investments. Our trillions of proprietary browsing, shopping, and streaming signals paired with extensive supply-side relationships and our secure clean rooms provide advertisers the ability to optimize advertising, deliver greater precision, and drive efficient and effective advertising outcomes. And in June, we announced a momentous partnership with Roku, giving advertisers access to 80 million connected TV households, the largest authenticated connected TV footprint in the US, exclusively through Amazon DSP. It's a giant leap forward for advertisers, bringing best-in-class planning, audience precision, and performance to TV advertising. We also announced an integration between Disney's real-time ad exchange and Amazon DSP. This collaboration allows advertisers to gain direct access to Disney's premium inventory across platforms like Disney+, ESPN, and Hulu, while allowing them to leverage insights from both companies. When advertisers work with Amazon, they're not just buying ad space. They're benefiting from exceptional programming, innovative technology, and unrivaled signals, measurement, and audience development that provides strong relevancy for consumers and return on investment for brands. Moving on to AWS. In Q2, AWS grew 17.5% year over year and now has over a $123 billion annualized revenue run rate. We continue to help organizations of all sizes accelerate their transition to the cloud, signing new agreements with companies including PepsiCo, Airbnb, Peloton, NASDAQ, London Stock Exchange, Nissan Motor, GitLab, SAP, Warner Brothers Discovery, 12 Labs, FICO, Iberia Airlines, SK Telecom, and NatWest. In the rapidly evolving world of generative AI, AWS continues to build a large, fast-growing, triple-digit year-over-year percentage, multi-billion-dollar business with more demand than we have supply for at the moment. A few points to make. First, on the hardware side, our custom AI chip, Trainium 2, is landing capacity in larger quantities and has impressively emerged as the backbone for Anthropic's newest generation Claude models and many of our most essential offerings like Amazon Bedrock. We've also launched Amazon EC2 instances powered by NVIDIA Grace Blackwell superchips, AWS's most powerful NVIDIA GPU accelerated instance. Second, in Bedrock, we've recently added Anthropic's Claude 4, and it's the fastest growing model ever in Bedrock. We've also continued to see strong adoption of Amazon Nova, our own frontier model, and it's now the second most popular foundation model in Bedrock. New features in Nova allow customers to customize their Nova models in ways they can't on other foundation models, allowing organizations to infuse these models with their unique expertise while optimizing for cost and speed. As people have become excited about building agents, they're realizing they lack the tools to build them. In May, we released Strands, an open source way to more easily build agents that's taken off with a wide range of customers with already 2,500 stars on GitHub and over 300,000 downloads on PyPI. Customers are also struggling with deploying agents into production in a secure and scalable way. It's holding up enterprises scaling agents. To help solve that problem, Bedrock just released Agent Core. Agent Core is a set of building blocks that gives customers the industry's first secure serverless runtime to provide both synchronous and asynchronous execution, agent identity and boundaries, a memory service, a gateway that translates services to MCP-compatible interfaces, built-in code execution and web browser tools, and an observability service. Customers are excited about Agent Core, and it frees them up to start deploying agents more expansively. Third, you're starting to see AWS release more powerful applications at the top layer of the AI stack. AWS Transform is an AWS agent that dramatically reduces mainframe modernization timelines from years to months, completes VMware to EC2 conversions up to 80 times faster, and makes it simple to move from .NET Windows to .NET Linux implementations, reducing licensing costs for .NET applications by up to 40%. We've also just released Curo, our new agentic integrated development environment coding agent. There's a lot of buzz around Curo, with several 100,000 developers using or requesting access in the first couple of weeks, 100,000 used in the first 5 days of the preview. What struck a chord for developers is that Curo allows them to do vibe coding, where developers use natural language to chat with a coding agent to build code. But unlike other coding agents where developers don't really have any structure to build on top of, Curo allows developers to use natural language to build a spec, and then automatically updates that spec as they continue to vibe code or interact with Curo. This makes it much easier to go from prototyping to production. Customers also like Curo's event-driven agent hooks that act like an experienced developer catching things developers might miss. When developers save a React component, hooks update that test file. When they modify API endpoints, hooks refresh README files. When they're ready to commit, security hooks scan for leaked credentials. It's still very early for Curo, but it seems clear we're onto something customers love, and Curo has a chance to transform how developers build software. I say this frequently, but remember that 85 to 90% of worldwide IT spend is still on premises versus in the cloud. In the next 10 to 15 years, that equation is going to flip, further accelerated by companies' excitement for leveraging AI. So AWS's significantly broader functionality, stronger security and operational performance, and much deeper experience helping enterprises modernize their infrastructure bodes well for the AWS business moving forward. We're also seeing momentum in a number of our other areas across Amazon. I'll mention just a few. We're excited about our progress with Alexa Plus, our next generation assistant powered by generative AI. We've been rolling out early access to US customers to start. Millions of customers have access now. We're seeing very positive feedback and will continue to iterate on the experience. We've recently completed our third successful launch of Project Kuiper. We haven't launched this service commercially yet, but already have an impressive amount of enterprise and government customers who have signed agreements to use Kuiper. In Prime Video Live Sports, our first season of NASCAR drew about 2 million viewers per race and the youngest audience among NASCAR broadcasters in more than a decade. We've recently announced our stellar broadcasting crew for our upcoming first NBA season, including Ian Eagle, Stan Van Gundy, Kevin Harlan, Dwayne Wade, Taylor Rooks, Blake Griffin, Dirk Nowitzki, Steve Nash, and Candace Parker. We also announced Denis Villeneuve, an Academy Award nominee, as the director for the next James Bond film. James Bond is in the hands of one of today's greatest filmmakers, and we cannot wait to get started on 007's next adventure. Finally, we continue to be very pleased with the growth and resonance of Amazon Pharmacy, as it's grown 50% year over year, year to date, on an already significant size base. A lot of good things happening across the company. With that, I'll turn it over to Brian for a financial update.
Thanks, Andy. Let's start with our top-line financial results. Worldwide revenue was $167.7 billion, a 12% increase year over year, excluding the impact of foreign exchange. Foreign exchange had a $1.5 billion favorable impact to revenue in the quarter, as foreign currencies generally strengthened versus the US dollar. As a reminder, our Q2 revenue guidance had anticipated an unfavorable impact of approximately 10 basis points or $100 million. Worldwide operating income was $19.2 billion, which was $1.7 billion above the high end of our guidance range. Across our segments, we continue to prioritize cost-effective innovation that delivers value for our customers. In the North America segment, second quarter revenue was $100.1 billion, an increase of 11% year over year. International segment revenue was $36.8 billion, an increase of 11% year over year, excluding the impact of foreign exchange. Worldwide paid units grew 12% year over year. We remain focused on inputs that matter most to our customers. In the second quarter, we saw broad-based strength across our key performance metrics. This includes sharp pricing and more in-stock availability, as well as record delivery speeds for Prime members. Our millions of global sellers continue to be an important contributor to our vast selection. This helps customers find the items they need and does so at a competitive price. Our investment in tools, services, and fast delivery speeds help our selling partners reach more customers and further scale their businesses. In Q2, worldwide third-party seller unit mix was 62%, the highest ever, up on 100 basis points from Q2 of last year. We're also closely monitoring the macroeconomic environment, including the impact of tariffs. As Andy mentioned, our Q2 plan factored in a range of assumptions, not all of which materialized. We will continue to consider a range of assumptions going forward. Shifting to profitability, North America segment operating income was $7.5 billion, an increase of $2.5 billion year on year. North America operating margin was 7.5%, up 190 basis points year over year. International segment operating income was $1.5 billion, up $1.2 billion year over year. International operating margin was 4.1%, up 320 basis points year over year. We're pleased with the strong execution of our operations teams and the positive experience they delivered for customers. In Q2, we saw productivity gains in our transportation network, driven by improved inventory placement, strong leverage on high unit volumes, and higher levels of in-demand inventory from both first-party and third-party selling partners. These factors contributed to faster delivery speeds and lower costs. Outbound shipping costs were up 6% year over year and continue to grow at a meaningfully slower pace than unit growth, which, as I mentioned earlier, was up 12% year over year. We're committed to initiatives that further improve our cost structure. Strategic inventory placement drives multiple benefits, including better in-stock availability, shorter delivery routes, and faster customer delivery times. When we optimize inventory location, we can consolidate more items per package, reducing packaging materials and costs. To achieve this, we will continue to improve upon our inbound network, expand our U.S. same-day delivery facilities, including in rural communities, and implement robotics and automation across our facilities. While year-over-year improvements in operating margin may fluctuate, we have a purposeful strategy to achieve sustained progress over time. Shifting to advertising, advertising revenue grew 22% year over year, driven by sponsored products as we saw strong traffic in our stores. Advertising remains an important contributor to profitability in the North American international segments. Our full funnel advertising approach of connecting brands with customers is resonating. Moving next to our AWS segment, revenue is $30.9 billion, an increase of 17.5% year over year. AWS now has an annualized revenue run rate of more than $123 billion. During the second quarter, we continue to see growth in both our generative AI and non-generative AI businesses. As companies turn their attention to newer initiatives, bring more workloads to the cloud, restart or accelerate existing migrations from on-premise to the cloud, and tap into the power of generative AI. AWS operating income was $10.2 billion. We did see AWS segment margins decline from a record high of 39.5% in Q1 to 32.9% in Q2. The largest quarter-over-quarter driver of the decrease, or about half, is due to the seasonal step-up in stock-based compensation expense, driven by the timing of our annual compensation cycle. AWS margins also saw headwinds from higher depreciation expense, as well as unfavorable impacts from year-over-year fluctuations in foreign exchange rates. The depreciation expense is a result of our growing investments in capital expenditures in AWS. As we've said in the past, we expect AWS operating margins to fluctuate over time, driven in part by the level of investments we are making at any point in time. We will continue to invest more capital in chips, data centers, and power to pursue this unusually large opportunity that we have in generative AI. Now turning to our cash CapEx, which was $31.4 billion in Q2. We expect Q2 CapEx to be reasonably representative of our quarterly capital investment rate for the back half of this year. AWS continues to be the primary driver as we invest to support demand for our AI services and increasingly in custom silicon like Trainium, as well as tech infrastructure to support our North America and international segments. Additionally, we continue to invest in our fulfillment and transportation network to support growth of the business, improve delivery speeds, and lower our cost to serve by investing in same-day delivery facilities as well as robotics and automation. Collectively, these investments will support growth for many years to come. Moving on to our third quarter financial guidance. As a reminder, our guidance considers a range of possibilities which take into consideration Q2 results, trends we see quarter to date, and expectations around the macroeconomic environment, including tariffs. Q3 net sales are expected to be between $174 billion and $179.5 billion. We estimate the year-over-year impact of changes in foreign exchange rates based on current rates, which we expect to be a favorable impact of approximately 130 basis points. As a reminder, global currencies can fluctuate during the quarter. Q3 operating income is expected to be between $15.5 billion and $20.5 billion. In this dynamic environment, we'll focus on what matters most, delivering exceptional customer value through broad selection, competitive prices, and unmatched convenience. We'll remain focused on driving a better customer experience and believe putting customers first is the only reliable way to create lasting value for our shareholders. With that, let's move on to your questions.
Thank you. At this time, we will now open the call up for questions. We ask each caller to please limit yourself to one question. If you would like to ask a question, please press star one on your keypad. We ask that when you pose your question, you pick up your headsets to provide optimum sound quality. Once again, to initiate a question, please press star, then one on your touch-tone telephone at this time. Please hold while we poll for questions. Thank you. Our first question comes from Doug Anmuth with JP Morgan. Please proceed with your question.
Thanks so much for taking the questions. I have two. First, can you just help us understand with some more granularity how tariffs are being absorbed across suppliers, Amazon, and consumers, and whether you anticipate any change going forward? And then second, on AWS, we're seeing significantly faster cloud growth among the number 2 and 3 players in the space. I totally appreciate that AWS is coming off of a bigger base. But beyond that, do you think the output gap is due more to customer demand or infrastructure supply or both? Thanks.
Yeah, I'll take both those. I'll start with the tariffs. I think what we've said a number of times, and we still believe it, is we just don't know what's going to happen moving forward. It's hard to know where the tariffs are going to settle, particularly in China. It's hard to know what will happen when we deplete, some of the pre-buys that we did on our own first-party retail, and then some of the forward deploying that we saw of our third-party selling partners. And when, if costs go up over time, we're unsure at this point who's going to end up absorbing those higher costs. What we can tell you is what we've seen so far in the first half of the year. And in the first half, we just haven't seen diminished demand, and we haven't seen any kind of broad-scale ASP increases. And so that could change in the second half. There are a lot of things that we don't know, but that's what we've seen so far. On the question on AWS, the first thing I'd say is, as you said, Doug, in your question, year-over-year percentages and growth rates are always a function of the base in which you operate. And we have a meaningfully larger business in the AWS segment than others. I think the second player is about 65% of the size of AWS. And when we look at the results over the last number of quarters, there's some times where as far as we can tell, we're growing faster than others, and sometimes others are growing faster than us. But it's still like if you look at the second place player you're talking about, it's still a pretty significant segment, market segment leadership position that we have.
And regardless, these are all really just moments in time. The last week is a moment in time too, where the reality of what really matters is what customers' experiences are in operating on these platforms. And if you look at what matters to customers, what they care a lot about what the operational performance is, what the availability is, what the durability is, what the latency and throughput is of the various services. And I think we have a pretty significant advantage in that area. They care a lot about security. If you have data that matters, and for most companies, they're putting data that they really care about in the cloud, the security and the privacy of that data matters a lot. And there are very different results in security in AWS than you'll see in other players. And you could just look at what's happened the last couple months. You can just see kind of adventures at some of these players almost every month. And so very big difference, I think, in security. And then I think a really significant difference in functionality, where not just in the core infrastructure do we have a lot more functionality in our services, but I think if you look at our end-to-end offering in AWS, in AI, it's, from the bottom of the stack all the way to the top, it's pretty different. And so, I feel good about the inputs and the services that we're offering to customers across AI as well as non-AI. And we have more demand than we have capacity right now, so we could be doing more revenue and helping customers more, and we're working very hard on changing that outcome and how much capacity we have. But it's still you look at the business, it's a $123 billion annual revenue run rate business, and it's still early. I mean, how often do you have an opportunity that's $123 billion of annual revenue run rate where you say it's still early? It's a very unusual opportunity that we're very bullish about.
Thank you. Our next question comes from Mark Mahaney with Evercore. Please proceed with your question.
Okay, I'll stick with AWS to start it with. Could you just disclose the backlog number? And then in the past, I know you've talked about these supply constraints and hoping that they will sort of resolve themselves by the back half of the year. Is that still your intention? Anything that suggests that the supply constraints are going to get resolved earlier or later? And then a long-term question on Alexa Plus, and I've been experimenting with it for a while. Just Andy, when you think about the potential that has in terms of increasing engagement, maybe tapping into some services revenue, advertising, maybe a little bit more retail sales per household, you're just reducing friction. Just talk about how, from a financial perspective, how you think that could play out, how we would maybe see that in the numbers. Thank you very much.
Hey, Mark, this is Dave. I'll just start off to give you the backlog figure. So at the end of the quarter, at June 30, that was $195 billion. So that's up about 25% year over year.
On the supply constraints as it relates to AWS and what we see there, as I mentioned, we have more demand than we have capacity at this point, and I think that, and you see, some of the constraints, they kind of exist in multiple places. The single biggest constraint is power. But you also see constraints off and on with chips, and then some of the components that, once you have the chips to actually make the servers, there are, sometimes you have new generations of chips that are a little bit later than they're supposed to be, and sometimes you get the chips, and the yield you get in making servers isn't what you expect when you get to ramp. So there are a bunch of those pieces today that we're working on. It's really true across the industry today. I don't believe that we will have fully resolved the amount of capacity we need for the amount of demand that we have in a couple quarters. I think it will take several quarters, but I do expect that it's going to get better each quarter, and I'm optimistic about that. I think on the Alexa question, I think I'd start by saying the Alexa Plus experience is so much better than I think our prior Alexa experience. She's much more intelligent than her prior self. She's much more capable. And I would say, unlike the other chatbots that are out there today who are good at answering questions but really can't take any action for you, Alexa Plus can take a lot of action for you, which is very compelling. So I can ask Alexa to play music for me, or play video for me, or move my music from one device to another. Or if I'm listening to a song that's on that's in a movie, I can ask Alexa Plus to actually put that movie scene on that of a song I'm playing, and it'll put it on my Prime Video on Fire TV. Or if I have guests coming over, I can say, Alexa, draw the curtains, put the light on the porch and the driveway, increase the temperature by 5 degrees, and put on music that would be great for a dinner party. And she does all that just for using natural language. So she can take a lot of actions, and it's compelling. And what we see so far, we've been rolling out Alexa Plus, starting in the U.S. It's with millions of customers now. The rest in the U.S. coming in the next couple of months, and starting the international rollout more broadly later in the year. And customers really like the experience. They recognize how much better it is than what it was before. The ratings are very high. The usage is much more expansive than what they were using before. The number of calls they're making is meaningfully higher. And I think there are a number of different areas where we'll see benefit. I think first, if you build the world's best personal assistant, that has a lot of utility for customers, and therefore it gets used a lot. So it means everything from people are excited about the devices that they can buy from us that has Alexa Plus enabled in it. People do a lot of shopping, and it's a delightful shopping experience that will keep getting better. I think over time there will be opportunities, as people are engaging in more multi-turn conversations, to have advertising play a role to help people find discovery, and also as a lever to drive revenue. And I think over time you could also imagine, as we keep adding functionality, that there could be some sort of subscription element beyond what there is today. Today, Prime members get Alexa Plus for free, and non-Prime members pay $19.99 a month for Alexa Plus. So I think it's still very early days, but we're very encouraged by the experience we're providing, and you can bet we're going to be iterating on it constantly.
Thank you. And our next question comes from the line of Colin Sebastian with Baird. Please proceed with your question.
Thanks for taking the questions. I guess first off, with respect to the international segment and the progress in both revenues and margins, I was hoping you could add maybe some color on the drivers of each of those and the sustainability of the improved efficiency in those markets. And then, Andy, you mentioned Kuiper. We haven't heard as much about that of late. So maybe if you could review where things stand relative to next year's launch target, timing of the service rollout, and maybe any perspective you have on the longer term ambitions for the satellite network. Thank you.
Thanks, Colin. This is Brian. I'll start with the international segment question. So, very strong quarter for international segment, both on revenue growth and also on operating margin. Operating margin was up 320 basis points year over year to 4.1%. And if you look, that's the continuation of a strong progression we've seen quarter by quarter over the last 10 quarters. In total, we've seen an increase of close to 700 basis points during that time period. So really, it's a tale of two pieces of two segments, sections within international. One is the established countries like UK, Germany, and Japan, already at similar margin profiles to the U.S. So as they continue to grow, their contribution to profit will grow over time, and that's what we're seeing. In the quarter, we saw strong productivity in our transportation network in those countries, much like we saw in the U.S., and that's led to higher units per package and faster delivery speeds at lower cost. So again, the theme of lower cost to serve and also increased speed and better selection for customers continues to grow internationally as well. In our emerging countries, we're pleased with the progress we're making there. We've launched 8 countries, of course, in the last 5 years, and they're all varying degrees of upfront investment and different point in times in their journey to profitability. But they're all making very nice improvements quarter over quarter in growing selection, adding Prime members, and expanding our customer offerings. So I think what you're seeing again is sustained improvement in those areas
feel very good about it. The established countries are continuing to grow and develop and very much look like the United States. And the emerging countries, again, are all very different stages of growth right now. On the Project Kuiper question, so Project Kuiper is our low Earth orbit satellite constellation that we're putting up and launching. And, there's 400 to 500 million households worldwide who don't have broadband connectivity. And it means they can't do a lot of the things we take for granted, like education online or business online or shopping or entertainment. There is really a digital divide, and it's much needed. And it's also true for enterprises and for governments that they have assets or needs to have visibility or connectivity that they can't get today, given the lack of broadband in a bunch of places around the world. So there's a high need. I would say that as we get our constellation into space, there will really be two players that have what I would consider the modern technology in low Earth orbit satellite. One is the incumbent in the market today, and the second will be Project Kuiper. I think that we will have a pretty meaningful differentiation here in performance. If you look at the performance of what I expect on the uplink and downlink, I think Project Kuiper will be advantaged. I also think the pricing is going to be very compelling for customers. And then I think if you think about the three key customer segments who want low Earth orbit satellite: consumers, enterprises, and governments. We have very strong relationships with all three customer segments, given our consumer businesses and our AWS business. And I think if you think about enterprises and governments, a lot of what they want to do when they take the data down from space is they actually want to put it into a cloud to do analysis, analytics, and AI and various operations on top of it. And the fact that Project Kuiper and AWS are so seamlessly connected is very attractive to enterprises and to governments. And I'm kind of amazed. We haven't launched Project Kuiper yet, but the number of enterprise and government agreements that have been signed already to use Project Kuiper is impressive. So we're working very hard to get the satellites into space. We have some delays with some of the rocket providers, but we have most of the available rocket launches over the next couple of years, and we're very hopeful to get the service into commercial beta later this year or early next year.
Thank you. And our next question comes from the line of Brian Novak with Morgan Stanley. Please proceed with your question.
Thanks for taking my questions. Andy, I have two for you on AWS. They're a little tough, but I'm gonna throw them at you. So there is a Wall Street finance person narrative right now that AWS is falling behind in Gen AI with concerns about share loss to peers, et cetera. Can you just sort of address that? What is your rebuttal to that? And talk to us about your and the team's most important focal points, just to ensure that AWS stays on the nice edge of innovation versus hyperscaler peers. And then secondly, I know AWS is a big business, but is there any reason to assume it shouldn't accelerate in the back half and into 26, given the size of the opportunity and all of the Gen AI capabilities going to sort of come to us in the next 12 months?
Yeah. So on the first one around AI, the first thing I would say is that I think it is so early right now in AI. If you look at what's really happening in the space, you have it's very top heavy. So you have a small number of very large frontier models that are being trained that spend a lot on computing. A couple of which are being trained on top of AWS, and others are being trained elsewhere. And then you also have, I would say, a relatively small number of very large scale generative AI applications. The one category would be chatbots, with the largest by a fair bit being ChatGPT. But the other category being really, I'll call it coding agents. And so these are companies like Cursor, Vercel, and Lovable, and some of the companies like that. Again, several of which run significant chunks on top of AWS. And then you've got a very large number of generative AI applications that are in pilot mode, they're in pilots, or that are being developed as we speak, and a very substantial number of agents that also people are starting to try to build and figure out how to get into production in a broad way. But they're quite early, and many of them that are out there are, they're significant, but they're just smaller in terms of usage relative to some of those top-heavy applications I mentioned earlier. We have a very significant number of enterprises and startups who are running applications on top of AWS's AI services, and then but they're all, again, like the amount of usage and the expansiveness of the use cases and how much people are putting them into production and the number of agents that are going to exist, it's still just earlier stage than it's going to be. And so then when you think about what's going to matter in AI, what are customers going to care about when they're thinking about what infrastructure to use, I think you kind of have to look at the different layers of the stack. And I think for those that are both building models, but also just if you look at where the real costs are, they're going to ultimately be in inference. Today, so much of the cost is in training because customers are really training their models and trying to figure out how to get applications into production. But at scale, 80 to 90% of the cost will be in inference because you only train periodically, but you're spitting out predictions and inferences all the time. And so what they're going to care a lot about is they're going to care about the compute and the hardware they're using. And, we have a very deep partnership with NVIDIA and will for as long as I can foresee. But we saw this movie in the CPU space with Intel where customers are hankering for better price performance. And so, we built, just like in the CPU space, where we built our own custom silicon in building Graviton, which is about 40% more price performant than the other leading x86 processors. We've done the same thing on the custom silicon side in AI with Trainium, and our second version of Trainium 2 has really, it's become the backbone of Anthropic's, next Claude models they're training on top of, and it's become the backbone of Bedrock and the inference that we do. So I think a lot of the inference, it's about 30 to 40% better price performance than the other GPU providers out there right now, and we're already working on our third version of Trainium as well. So I think a lot of the, compute and the inference is going to ultimately be run on top of Trainium 2, and I think that price performance is going to matter to people as they get to scale. Then I would say that that middle layer of the stack are really, it's a combination of services that customers care about to be able to build models and then to be able to leverage existing leading frontier models and then build, high quality generative AI applications that do inference at scale. And, we see it for people building models. They continue to use SageMaker AI very expansively. And then Bedrock, when you're leveraging leading frontier models, is also growing very substantially. And, as I said in my opening comments, the number of agents at scale is still really small in the scheme of what's going to be the case. But part of the problem is it's actually hard to actually build agents, and it's hard to deploy these agents in a secure and scalable way. And so I think the launches we made recently in Strands that make it much easier to build agents, and then Agent Core that make it much easier to deploy at scale and in a secure way, are being very well received, and customers are excited. It's going to change what's possible on the agent side. And then I think that you've got a very large number. I mean, remember, 85 to 90% of the global IT spend is still on premises. If you believe that equation is going to flip, which I do and we do, you have a lot of legacy infrastructure that you've got to move. These are mainframes. These are VMware's instances. And, when we build agents like AWS Transform that make it much easier to move mainframes to the cloud, much easier to move VMware to the cloud, much easier to move .NET Windows to .NET Linux to save money. Like, those are compelling for enterprises, or things like Kiro that allow customers to develop in a much easier way and in a much more structured way, which is why I think people are excited about it. So I think I really like the inputs in the set of services that we're building in the AI space today. Customers really like them, and it's resonating with them. I still think it's very early days in AI and in terms of adoption. But the other thing I would just say is that remember, because we're at a stage right now where so much of the activity is training and figuring out how to get your generative AI applications into production, people aren't paying as close attention as they will in making sure that those generative AI applications are operating where the rest of their data and infrastructure is. Remember, a lot of generative AI inference is just going to be another building block like compute, storage, and database. And so people are going to actually want to run those applications close to where the other applications are running, where their data is. There's just so many more applications and data running in AWS than anywhere else. And I'm very optimistic about, as we get to a bigger scale, what's going to happen for AWS on the AI side. And I think we have a set of services that is unique, top to bottom in the stack. I think on the last part about what do we expect with respect to acceleration, we don't give guidance by segment, so I'm not going to try and give you guidance. But I do believe that the combination of more enterprises who have resumed their march to modernize their infrastructure and move from on-premises to the cloud, coupled with the fact that AI is going to accelerate in terms of more companies deploying more AI applications into production that start to scale, coupled with the fact that I do think that more capacity is going to come online in the coming months and quarters, make me optimistic about the AWS business.
Thank you. And the next question comes from the line of Ron Josey with Citi. Please proceed with your question.
Great, thanks. Thanks for that, Andy. That was really helpful. Maybe taking that same question, but focusing internally on Amazon. I think you penned an article or a blog post back in June just talking about the ability or potential with Gen AI agents and improving efficiencies and speed to market internally. So would love to hear your thoughts as you think about how Amazon is adopting generative AI internally, how perhaps you've seen improving speed to market as a result of everything you've just talked about. Thank you.
Yeah, I think that AI is the biggest technology transformation of our lifetime, which is saying a lot because even in some of our relatively short lifetimes, we've been through the cloud, mobile, and the internet itself. But I think it's going to be the biggest transformation technically in our lifetime, and I think it's going to not only change every customer experience that we know and enable customer experiences we really only dreamed about before, but it's also going to change very substantially the way we work. And if you think about it, the way that we do coding, the way that we do analytics, the way that we do research, the way that we do finance, and measure finance. I mean, really, the way we do business process automation, the way we do customer service, every single area that I can think of in the way we work is likely going to be impacted in some meaningful way by AI. And I think when you have a big shift like that, you have two macro choices. You can either decide that you're going to embrace it and you're going to help shape it, and you're going to figure out how to build the right tools to allow you to take advantage of the technology, or you can wish it away and have it shape you. And the posting that you're referencing, Ron, that I made was just really being clear with the team that we're going to pursue that former approach. We are going to embrace it. And we're going to try and shape it. And so we have we have a number of tools and agents that we've built already inside the company. And these are things like, if you think about Kiro and the opportunity to have coding agents do a lot of the coding, that's very compelling. It's going to allow our teammates to be able to start from a more advanced starting spot and to be able to invent for customers much more quickly and much more expansively. If you think about services like Connect, which is our AWS service that does call center software, that has a lot of AI built into it that changes the productivity of all your customer service agents. And you can just imagine across the board the types of things we're going to do to make it easier to get software out, to build high quality software, to do operations, QA, to automate a lot of the business process coordination that happens inside the company. We're going to work on a whole bunch of those areas to allow ourselves primarily to be able to invent for customers much more quickly and expansively. But also, I think it's going to make all of our teammates' jobs much more enjoyable, because they won't have to do as many of the rote parts of the job that we all do right now. And they're going to be able to own more pieces of what they're trying to solve for customers. And we want deep owners that want to own as much end-to-end as possible.
Thank you. And our final question will come from the line of Justin Post with Bank of America. Please proceed with your question.
Great. Thanks. I'll just ask on the revenue guidance. It looks pretty robust growth in the third quarter. I know you won't say whether AWS is expected to accelerate, but could you talk about some of the drivers and what kind of tariff and other contingencies you've put in there, and then maybe any thoughts on how you're thinking about how the Q4 is shaping up? Thank you.
Yeah, hi, Justin. This is Brian. I'll take this one. Yeah, we've got it to 174 billion to 175 billion. And 179.5 billion, a typo. We feel good about the growth rate in Q2 that we had, and the acceleration in a number of areas, including units. And we had a very successful Prime Day earlier this month. So there is uncertainty on where tariffs will settle and maybe the ultimate impact on consumers, as Andy mentioned earlier. But we feel really good about the key inputs we control: price, selection, and convenience. We've talked about delivery speeds increasing. We've talked about selection increasing, high in-stock levels, well-dispersed inventory close to customers. So we think that all works in our favor. So I would say we're cautiously optimistic. I'm not going to give any guidance for Q4 at this time, but we'll talk about that next time.
Thanks for joining us on the call today and for your questions. A replay will be available on our investor relations website for at least 3 months. We appreciate your interest in Amazon and we look forward to speaking with you again next quarter.
All right. I think that the stock is reacting a lot worse than the way that I perceived the comments that Andy Jassy were making. Obviously, there were some comments that I think could have been a little bit more bullish, or just phrased a little bit more bullish, like in how they're going to win cloud. He kind of didn't say that they're going to win. He's just like, I think we're going to hold our own, which obviously the market didn't deem that as being very strong, right? That being said, I still have to remember the underlying asset here. Every single part of their business continues to grow. They're dominating in e-commerce. They're getting more and more parts of the equation. We're getting into healthcare and, satellite internet and all of these additional things that are only going to add to their growth rates. I do think that he is completely right there. Cloud will continue to grow for all of their players. And, Amazon is not one, in my opinion, to bet against. So, I think I'm going to pick up some more shares here at 216, 217 if I can get a little allocation. But I think that's exactly what I'm going to go try to do right now. I'll let you guys go and get ready for my next show, probably around 7 or 7:30 tonight, where we're going to talk about this as well as other things that have been popping up in the market. So, ladies and gentlemen, thank you all so much for watching. Really do appreciate your time. But bye for now.